Every month, the Labor Department comes out with its numbers, sort of a measure of the health of the U.S. economy in terms of jobs being created. And yes, they're still being created in this slow recovery. It's not all that spectacular, though. Market strategist for BMO Global Asset Management is Brent Schutte, and you always have some good read on these numbers. Give us the breakdown for those the data that came out for December.
Sure. Expectations had risen a little bit after last Thursday's ADP report, which showed 215,000 employees added. But all in all, the 155,000 that were added last month on the non-farm payrolls report was about in line with the original consensus expectations. Manufacturing was pretty strong, adding about 25,000 jobs, and surprisingly, construction added about 30,000, which may be some of the impacts of Sandy rebuilding starting to filter into these numbers.
I also see the healthcare, food service is up, even while we have government jobs. Those numbers are going down still.
Sure, for the year, government jobs actually contracted. Earlier on in the recovery, or before the recovery actually, private jobs were actually contracting faster and government jobs weren't doing much. And now you're starting to see the opposite occur, where private sector jobs are coming back and government jobs have kind of slowed and actually contracted quite a bit.
All right, well, what's your read? What's your take on this? We still have 7.8% as the official unemployment rate. So is it just trickling along as before?
Sure. I think one of the hardest things that we have to do now in my profession is figure out what policymakers and politicians are going to do. And unfortunately, the fiscal cliff came and went. But nothing really was solved, and you're going to have another one of those coming up in February, which is probably going to keep a lid on hiring for a while. All in all, 2012 and 2011, about 153,000 employees were added per month. The unemployment rate ticked down 0.8% in 2011 and 0.7% down in 2012. And I don't see any reason right now that that's going to expand dramatically or change dramatically in 2013.
Interesting how it's up to the politicians again. We had a fellow in from Assure Payroll last week talking about small business owners are very uncertain. They're not going to be hiring because of the concern about the debt ceiling, sequestration, and some of these other things.
Absolutely. It's small business owners are the ones taking the tax hike and the tax increase, and they're right now probably the ones that have the most uncertainty with what happens with the new health care bill and what happens with taxation. And I don't think that's going away, because right now I think the debt ceiling debate that you're going to have coming up in February is going to be even more rancorous than the one that you just had. Republicans think they gave away taxation, and now they're going to
digging in their heels.
And they think that now they're going to get spending cuts, whereas the Democrats are saying, if you're going to get more spending cuts, you've got to give me more tax increases. And so I think the end of February could be very interesting and very ugly for the markets.
The fiscal cliff of all mothers of fiscal cliffs, or
Absolutely.
however we want to put it, it could be a lot worse.
Absolutely.
Brent Schutte from BMO Harris, thanks so much.
Thank you.